Good morning. Uh, Let me first thank each one of you for sparing your time on a Saturday morning and joining us for this very important and special webinar. Today, according to me, is a very auspicious day for us because we formally want to introduce Abakkus Mutual Fund to all of you. And for that, we have none other than Mr. Sunil Singhania himself. And before I invite Sunil sir, let me spend a couple of minutes to inform you that Abakkus Group is one investment management firm which was founded by Mr. Sunil in 2018, and it has come a long way. As we speak, we have products in PMS, AIF, private equity funds, UCITS, and now we are gonna launch mutual funds as well. As we speak, we have more than 39,000 crore of assets, and the firm has been built on basics. And that is one of the questions which I am sure Sunil is going to talk about, that the punchline of our group is belief in basics. Uh, on August of 29th this year, we received the mutual fund license, and all of us at Abakkus Group are very excited with this opportunity to take our investment philosophy, our processes to larger audience. Like I said, that we received the mutual fund license in 2025 August. From that day till now, we have built and we have gathered a very good seasoned team. For example, we have Mr. Sanjay Doshi, who joined us back in about April. He comes with a vast experience of about 20 years in fund management, having worked with Nippon Mutual Fund, Macquarie, and even JP Morgan. We also have Mr. Suresh Rajgaur, who is our Chief Operating Officer. He also brings a vast experience of about 17 years. And myself, I have been part of the industry for last 25 years, and all of us are quite excited for the opportunity. With this, let me invite Mr. Sunil, who doesn't need any introduction, but I'll just stick to the flow that I must introduce Mr. Sunil. He has been a veteran investor, face of good investing for more than last 30 years, having worked with Nippon for more than 17-18 years. He started Abakkus in 2018 and has continued the legacy of his investing principles through Abakkus PMS, AIF, and usage, etc. So we have come a long way, and still there's a huge opportunity ahead, for which I'll invite Sunil sir. Thank you so much for joining.
Pleasure. Thank you, and thank you everyone for joining in.
Before I start, let me start with this question: that what does squirrel means to us?
No, sir, I think thanks a lot, Vaiibhavv, and very glad to have you as a part of Abakkus Group. And as I said, good morning. Thank you everyone for always being so kind and so supportive of all of us, and me in particular. I think in 2018, when we set up Abakkus, I think the whole perspective was what do we stand for? And as you rightly said, our tagline is believe in the basics. And we always believe that basics last for centuries. Narratives, trends, they last for a short period of time, but basics last for centuries. And I've always been enamored by squirrels. So when I was staying in my earlier place, I used to always watch squirrels because there was a tree which was very close by, and it used to give a lot of peace. And then when you see the behavior of squirrels, what do? They are always active. They are very balanced. They are always positive. More importantly, from an investment perspective, they are hibernating animals. So they keep on collecting small bits every day. And I think that is what fund management is all about. Being balanced, being active, being flexible, and at the same time, collecting small bits of returns every day. And I think that is what a squirrel is all about.
That's nice. So, sir, like I introduced Abakkus, we started in 2018 and we have come a long way. So what is your vision? How do you look at the entire Indian economy, and why do you think Abakkus started mutual fund? And through mutual funds, what do you want to deliver to the larger audience and Indians, of course?
So see, ultimately, the growth of the general population in any country is based on the growth of the economy.
Correct.
If the economy grows, then standard of living, per capita income, well-being of every citizen of the country will improve. So, we got our independence in 1947. Took us 60 years to reach $1 trillion. Now, after 78 years, we are a $4 trillion economy. At least our view is that in the next 7-8 years, we will be 8 trillion. So the wealth which we have created over the last 78 years, the same wealth is going to be created over the next 7-8 years. And how do you participate in that? Obviously, as people will be working, we are doing a business, we'll be doing our jobs and we'll participate. As far as the savings are concerned, savings used to earlier go into, hard assets, jewelry. I think now, I would say generally people are more aware. They understand that equity investing is like becoming partner in the businesses. And if the economy grows, then the companies will grow. And if the companies grow, the investors in those companies will also grow.
Sure.
And I think with that in mind and what we have already seen, the entire investment ecosystem has evolved in India.
That's right.
But it's still early days. We are not even $100 billion, I think $1 trillion of mutual fund, as an industry. We're like 75 lakh crore, which is roughly 800-900 billion dollars. But we have miles to go. From Abakkus perspective, I think we have grown pretty well, and a large portion of our AUM is also because of the appreciation which has happened in our earlier funds. But as you rightly mentioned, we have venture fund, we have private equity, we have HNI related products like PMS and AIF, and we have funds for offshore. Mutual fund obviously is for the general, investor base, and we do believe that we can also add our bit to the options which are available to the investor base of crores and crores of Indians. And we sincerely believe that equity can be a big component of the saving of any individual.
Absolutely.
So India, we are very positive. Indian markets, we are very positive. Equity markets as an investment, a tool, we are very positive, and we do believe that we can also be an option for investors to look at when they're looking at their mutual fund, allocation, and that is where we are.
Great. So before I progress with more questions, I just want to take a pause and request everyone that please, if you have any questions, please put it in the Q&A box. And once we are done with our conversation, I'll take all those questions. So coming back to you, sir, that you rightly said that we are just 80 lakh crore of industry, and there's still long way to go. Of course, the understanding of equity market also is very, very important. And you, like I said, that you have more than 30 years of experience, and our entire investment team put together, I think total experience is more than 350 years. Now, this is one statement to make, that the experience is 350 years. But from your experience, where do you think it really comes as a play when you manage portfolios and when you manage any kind of investment product? Where does the experience actually come handy?
I think it's an excellent question and very relevant. So, see, one thing we have to understand is that India is a very diverse country. And India is also a country of lakhs and lakhs of entrepreneurs. So I'll just explain what I mean by these two. So if you look at Russia, obviously it is only oil and gas. Brazil used to be only commodities. China, predominantly government-owned companies, but now obviously some tech companies are coming. But if you look at India to some extent is like the US. We have presence across sectors. We have oil and gas, we have IT, we have pharma, we have financials, we have the new age companies coming in, we have pharma, we have consumer companies. And the number of listed companies are almost the highest in the world. And more entrepreneurs are coming in for listing.
Absolutely.
I think what this means is that we have almost 1,500 companies which are investable grade, which are listed. And therefore, you have such a wide, I would say, options of number of companies and more companies coming in to list. Now, if you look at external research will be concentrated only in the top companies. I think in-house research, which is what we have a lot of focus on and what we are also known for, is all about meeting companies at the initial stages, identifying them, riding with them, and try and make some outsized returns from investing in companies which are not widely covered.
Absolutely.
I think that needs a significant large in-house team. So the day we started Abakkus, I think we had 7-8 people on the investment side. Now Abakkus as a group, we have close to 25 people on the investment side.
Absolutely.
And I think that is what is very, very needed.
Sure.
I'm a very passionate investor. I'm a very balance sheet focused investor. I still read 1,200-1,300 balance sheets a year.
Wow.
And I think that is percolating down to my investment team, you know.
Great.
And, you know, I don't know, but I do believe that having a very, very strong in-house research team is very important in the Indian context.
Sure, sure. So like you said that you are a patient investor and you have been a fund manager for many, many years. एक क्वेश्चन तो हमेशा आता है, मार्केट कैसा लग रहा है?
So I think this is a very, very relevant question, and always I give a cliched answer that अब जब भी हमको पूछोगे तो मार्केट अच्छा ही लगता है, and that is not because we are in this business of garnering money, but ये दिल से है. So again, if you look at the last 25 years, you know, we have seen so many events which have shaken our confidence. You know, we had Lehman in 2008, for those who have been there in the business for that long. We have seen 2013 when everything was in a slowdown. We have seen COVID, we have seen multiple wars, we have seen now sanctions, tariffs, and whatnot, you know. But ultimately, economy keeps on growing. You know, so I would say on a day-to-day basis, markets will keep on moving up and down like a cardiogram. But ultimately, the trend of the economy is positive. And if the trend of the economy is positive, then equity markets have to follow. So we are quite optimistic. Obviously, from time to time, markets go into phases of overvaluation and undervaluation. I think that we have to live with. But for long-term investors, I sincerely believe that equity would be the best option to generate wealth.
Sure. But like if we go back to say 2024, September 24, when the markets touched the peak, and there were a lot of negatives being spoken. One was, of course, कि earnings nazar nahi aa raha, and the markets were at a very high valuation, like you also said, but earnings were kind of diminishing. And then for last 1.5 odd years, we also have seen time correction. However, where are we in terms of earnings? Like you also said, believe in the basics. वो तो मूल मुद्दा है equity investing का. So are you seeing any improvement there?
Yeah. No, again, you're very right. I think last 12-15 months have been tough on a one-year return perspective, but few things. One is, you know, the base is not correct. So September 24, we hit an all-time high of 26,200 for the Nifty. So that on that base, one-year returns look lower. If you just fast forward, January 26 aate, one-year return will start to look at 15% because January 25, markets had corrected to 22.5, 23,000. But irrespective of that, I think mid-24, markets did go into a little bit of an overvalued zone. There was optimism about elections because general elections were there. Mr. Modi won the third term. But you know, one thing in India, when elections happen, everything else comes to a standstill. And I think that is what happened. So September 2024 was a very, very bad quarter. GDP growth fell to 5%, but more important, corporate profit growth fell to only 3%.
Correct.
After that, we have seen every subsequent quarter some improvement. In fact, GDP growth in June quarter of 25 came in at a high 7.8%. We believe that was an abnormal, but you know, looking at what has happened, and I'll come to some of the positives, I think a GDP growth of 6.5-7% for the economy looks very, very possible. Corporate profit growth, even for the September 25 quarters, have trended up better. I think we're looking at a double-digit growth after almost 5 quarters for earnings, which is again great. But earnings for the second half, I'll come again, are looking more like 15% growth. Now, what has happened in between? We have had multiple small conflicts: India, Pakistan, Israel, Iran 1, Israel, Iran 2, Hamas, Lebanon, Algeria, Armenia, a little bit of Thailand, Cambodia. So there was a lot of ups and downs. Currency movements were crazy. You know, yen moving up and down, dollar index moving up and down. And most important, for the last 9-10 months, we are struggling with this tariff.
Now,
almost all countries have come to an agreement. India is left. The sound bites which are coming over the last 2-3 weeks are quite positive, including what we heard from President Trump last week. On the other hand, both the government and the central bank, which is RBI, have been pushing for growth. So RBI has infused almost 10 lakh crores of liquidity, 10 lakh crores of liquidity. We have had 100 basis points of rate cut. Hopefully there might be one more in the near term. Government has also gone in overdrive. We had 1 lakh crores of income tax benefit, 1
Yes.
lakh crores of GST benefit. So I think all in all, with a good monsoon, we are seeing the impact of that. So September end, which is when the impact of GST cut came in, you saw record sales of auto and consumption. October has followed suit. We are seeing a lot of optimism because the wedding season is also very busy. I think we are expecting that the second half should be quite good. And if the tariff thing gets solved, which we believe is a question of when rather than whether, वो होगा ही, आज नहीं तो कल बहुत near term में होना ही है. I think even for 27, we are now looking at earnings growth of 15-17%. So that earnings growth has finally come into fruition. I think our optimism on equity markets after like almost 12-15 months is pretty positive.
Okay. Like you also said that you read 1,200 balance sheets a year. How are you seeing the balance sheet structure of Indian companies today? Are you seeing fractures? Are you seeing Capex coming back? Is it that micro level pe bhi things are improving quite a lot or better than before?
So first, before coming to the corporate balance sheet, let us see the balance sheet of India.
Yeah.
Which is the most important balance sheet.
Yes.
I think it could not have been better. Fiscal deficit is in control. People were expecting that after GST cut, our deficit might increase. But in fact, there is wonder of wonder, which is very obvious. Despite cuts in GST rates, GST collection has gone up by 5% even in September month.
Okay.
So it is very visible that if you make things cheaper, the demand more than makes up for the loss of revenue. Sure. That is there. Our inflation is at the lowest level ever. Interest rates are coming down. Forex reserves are at $700 billion. Gold, we are not big proponents of gold, but from an India perspective, Indians now own almost $3.7 trillion worth of gold. You see the wealth effect which will happen. $3.7 trillion. Correct. And just to put in perspective, we don't even have $1 trillion worth of equity.
Yeah.
So our gold exposure is 4 times that of equity.
Correct.
And you also have a scenario where oil prices are at $60. It could not have been more better than India because India is one of the biggest importer of crude oil. And in fact, with renewables and solar and all coming up, our 2030 target of 50 gigawatts of solar has been achieved in 25 itself, 5 years earlier. I think these are all very, very positive from an India economy and India's balance sheet perspective. Now you come to the corporate balance sheet. If you look at the bank results, fantastic results. Why? Because NPAs, non-performing assets, are almost non-existent. Okay. You know, the systems process after massive NPA cycle till 2014, to the credit of this government, they've cleaned up the system. You can't walk into a PSU and bribe and get loans.
Sure.
And I think that is clearly reflected in asset quality being very, very high. And now with RBI and government also, I would say, infusing liquidity and confidence, consumption should also increase, which should also lead to Capex cycle coming up. And now with balance sheets so healthy, in fact, the debt equity ratio is the lowest in the last 15 years for corporate India as a whole. I think there is room for corporates, there is room for banks to increase the lending. Sure. And I think that would be the next trigger as far as GDP growth is concerned. So corporate balance sheets are fine. The country balance sheet is fine. What we need is revenue growth on the corporate side. And that we are very confident that the second half will be that period where you will start to see revenue growth.
Sure. In 2015, I remember when there was taper tantrum and people used to say that if US sneezes, we come down. And there was so many narratives going around. But coming to FII flow, because that time the entire episode was about FII flows. And we have also seen last 2 years flows have been diminishing only. How are you studying that? Do we really need a lot of FII flow, or FDI flow is taking care of what we require as a country?
Well, again, very relevant from an investor perspective. First of all, to the credit of all the mutual fund partners, distributors, investors, I think hats off to you because of the continuous investments which you have made in the equity markets. I think the markets have become to some extent immune from the volatility which we used to see because of FII flows in and out. On the FII flows, yes, 2 years has been an outflow kind of a period. Again, for multiple reasons. One is India was doing so well compared to the other markets that we became relatively very expensive. So just to give you a perspective, 2014 to 2024, Indian markets in dollar terms went up by almost 140-50% absolute. China was zero. In 10 years, zero returns. MSCI was also zero. So I think there was this short-term trend or trade, which was very visible, that you could take some money out of India and invest in China. So that was one reason why flows did see an outflow as far as India is concerned. The other thing was the world is moving on the investment side to high tech. There's a lot of, I would say, interest in everyone investing in high tech companies, data centers, AI, and so on and so forth. So if you see countries which have done well from an equity market perspective, like China or Taiwan or Korea or Japan or even the US NASDAQ, it is not actually the countries which are seeing inflows. It is the companies on the high tech side which are listed on these companies, on these countries' exchanges, which are seeing inflows. So a lot of tech related inflows automatically saw countries where there were listed companies. In India, we did not have those kind of companies, which are now slowly getting listed. Third, I would say that this is a trade which always happens, that there is a narrative, there is a trend, and that high tech was a trend. I think it is coming to some kind of stability. And that is the reason we are already starting to see October was a positive month from an FII flow perspective. November has been okay, but we do believe that as we move forward, there is going to be slightly positive flow. And we are already seeing that in our offshore fund. You're also right. FDI flows have been very strong. So if you look at the financial sector, RBL Bank, $3 billion of inflow. Yes Bank, $1 billion worth of inflow. You have rumors of Shriram Finance getting $2.5 billion of inflow, Samman Capital, IDFC Bank, and so many other, NBFCs and financial services, which are seeing huge flows. Even in our industry, asset management, there was a news of State Street coming in. There was a small inflow in one of the AMCs from a private equity fund. There are a lot of interest. So I think FDIs definitely will improve. I was just reading the newspapers again, there was a CII conference in Andhra Pradesh, and Google and Apple and so many others are all, including Reliance, Adani, all putting huge data centers and allied infrastructure in AP. So again, that is a flow from foreigners in terms of FDI. So we remain quite optimistic. I think India with 4 trillion going to 8 trillion remains one of the largest democracies in the world with the highest GDP growth and the capacity to absorb huge investments.
Sure. But as an investor, anything you are watchful about, anything worries you currently?
So every day there is something which is worrying. Performance is a big worry. But the jokes apart, I think, we have to understand one thing, that equity markets will always on a day-to-day basis have ups and downs. We always call it the cardiogram. As long as it is up and down, we are alive. So equity markets are like that. But what can be very worrying, I think on the horizon, not too much, which can be big causes of worry. But yes, I think we need to get this tariff thing behind us. ये बहुत दिन से चल रहा है, अगले हफ्ते, ये हफ्ते, वो हफ्ते, we have to get that behind us. And there are signs, with almost every country, President Trump has resolved it. He's under pressure in his own country. I was reading that, even on the food side, they have to reduce tariff because it is pinching the final consumer, because all food prices have moved up. So I think it's a matter of time, as I said. Geopolitical situation always are a cause of worry. We had recent a small terrorist, event, which we have to keep in mind, because we have little bit of volatile neighbors around us. But that is something which you can't predict. Now people say that US has $37 trillion of debt and there is going to be a problem. At some point of time, if you spend more than what you earn, you're going to have some issues. But whether it is in the next 2 months or after 10 years, that we don't know.
Difficult to.
I would just give a little bit of caution that what happens is that big drawdowns in the market or big fall in the markets happen because of events which we have not anticipated. So we had not anticipated, say, Russia, Ukraine. We had not anticipated Corona or COVID. We had not anticipated this tariff. I think if some uncertain thing were to happen, then there can be a drawdown. Otherwise, we are pretty okay. I think we are very, very confident that we are in a good spot.
Sure.
Valuations are slightly expensive, but it's fine.
Sure. So Sunil, coming back to Abacus journey, like we said that the journey has been superlative, no doubt about that. But I also know that it is not by chance. It has to be by design. And one of the designs which you have put in place is the meets framework, which is one of the key differentiating factor as an investor. So if you can help the audience understand about the meets framework, how did it originate and
Mhm.
what exactly happens in day-to-day life of our fund managers and research people?
No, I think very relevant again. So when we set up Abacus in 2018, as I said, we had 7, 8 investment professionals. We all got together for 2 days. We said, let us introspect and discuss all the mistakes we have made in life. And that is not to criticize each other, but to
Okay,
learn from them.
okay,
So I think I would say, mantra in life is make a new mistake every day. Don't repeat the mistakes.
okay.
Okay. Because if you repeat the mistake, then you are unpardonable.
Mhm. Exactly.
Because to err is human. So you can make a new mistake every day, but you can't repeat.
Repeat, correct.
And based on the mistakes we have made, we created two things. One is our investment philosophy, and second is the meets framework.
Ji,
Now, investment philosophy is very clear. We want to be alpha generators. We want
sure.
to be investors rather than allocators. Second is we are very numbers and balance sheet focused. We don't invest in loss-making companies. Third is we don't mind being the first or the only investor. In fact, we love. And that confidence comes out of our large research team and the huge effort we make in trying and meeting companies. Fourth, we are agile and flexible. We are okay to
Mhm.
investing in any company in any sector as long as it fulfills our criteria. Fifth is we are long-term investors. We invest as if we are becoming partner in the business.
Okay.
And sixth is we want to be very clear that the risk reward has to be in our favor. And in fact, we wrote a note which was bubble in quality, which has worked very beautifully last 4, 5 years. Because earlier, all quality stocks used to trade at some crazy
Yeah, yeah.
multiples and they underperformed massively because they were more than fully priced. Based on the investment philosophy, we created a framework. Now, what does a framework do? One, as I said, India is a large country with so many listed companies.
Correct.
Yes, we have large research. We do almost 400 and 450 companies research in-house, but we have like 1,500, 2,000 companies which are investable. So, from that 1,500, 2,000, how do you come to this 400, 450? So that framework helps in that. Second is it minimizes your mistakes. You'll never have zero mistakes. But if you have a framework, at least it minimizes the mistakes. और return is like a pot, घड़ा. उसमें
Hmm.
आप पानी डालोगे, अगर
Hmm.
नीचे बहुत सारे होल हैं,
वो
तो
जम
घड़ा कभी
जाएगा.
भरेगा ही नहीं. So it
Exactly.
is not only about picking the good stocks, but
Hmm.
also minimizing the holes in the
Sure.
portfolio. And now what is this MEETS framework? Very simple, MEETS. M is management. Now everyone says we invest in good management and we should, but how do you determine whether management is good or bad? कोई अच्छा कपड़ा पहन के आया, कोई बोला मैं वॉटन का हूं, तो is it good management? Maybe, but from our perspective, discipline of capital deployment is the most important criteria. So minimum 14, 15% ROC/ROE is what we look at when we invest in a company. E is earning. We are investing in a growing asset class.
Ji.
We are investing in companies which are growing. So we like to invest in companies where profits can double, ideally in 4 years, maximum of 5 years. Second E is very important, event, trends, and disruptions. We are in a very, very disruptive world. We are changing very fast.
Absolutely.
पहले ऐसा नहीं है कुछ ले लिया 30-40 साल तक you hold on to it. Now the way we work, the way we study, the way we consume, the way we shop, the way we entertain is completely changed. So what is market price of a share? Market price of a share is equal to EPS into P.
P.
EPS is the earning capability
Absolutely.
or the earnings of a company. P is a perception.
Perception.
And P's determine market prices more than earnings.
Okay.
So if there is a disruption, I always give the example of newspapers. I read newspapers. My kids don't read newspapers. In fact, they make fun of me that you're reading yesterday's news. Okay. And if you see the advertisements have shifted from the newspaper to the digital platform. So the P multiples of newspaper companies globally have fallen. The same thing is the case with channels. अभी हमारा entertainment has shifted from the Star TV, Sun TV, Sony TV to Netflix Amazon Prime and Hotstar.
Yeah, OTT.
So the P multiples of channels have changed. Even motor car companies, passenger vehicles, globally Tesla trades at maybe 200, 300 P. But BMW, Mercedes, Stellantis, Volkswagen, they all are great brands. They trade at 6, 7 P multiples because there's a threat that everything will move to EV. So that is very important. T is timing. We can't time the market, but we can definitely be patient in not getting swayed into buying something just because it is in fashion. And we have seen multiple times, I mentioned to you, the best companies, not necessarily the best stock, quality companies. 2017, 18, 19, everyone wanted quality companies. Now see 5-year returns are 0.
Absolutely.
Because they were priced to perfection. Then you have so many narratives. Sometimes it is railway, sometimes it is data center, sometimes it is defense, sometimes it is EV, sometimes it is renewable. All great narratives. But we have also to be very clear that just don't buy anything because everyone else is buying. Very, very important. And last is the structural bit. We are value conscious, but at the same time, we are very open. If there are some sectors, some companies which have a long way of super growth, then you'll have to pay a premium. So I think this meets framework ensures, as I said, focused as well as making minimal mistakes.
Got it. Thank you. I think that was very, very useful. And Sunil, in some of these interviews, I've also heard you saying that boring creates wealth. Boring se paisa banta hai. And you also mentioned about investor versus allocator. So how do you think all this coupled in a mutual fund one can expect through fund management or the way we will manage money?
So the power of compounding we all know.
Yeah.
If you keep on growing at a particular percentage, the outcome is phenomenal.
Yeah.
So, I've been in the mutual fund industry for 16 years, been very fortunate to manage a fund, which was the first fund to become 100x by way of appreciation. But, the compounding growth was 21, 22%, but 100x looks so huge.
Yeah.
My view is that when you invest, as I said, you are investing in businesses. And if you're able to compound systematically 14, 15%, in 5 years, you will double, in 10 years, will be 4x if you're able to generate that kind of returns. But from an investor perspective, आपको रोज circuit वाला share चाहिए कि कौन सा कल 20% बढ़ेगा. So that is fun.
Yeah.
On the other hand, boring thing is you buy something and then you ride the growth gradually, slowly, but surely. And normally, things which are boring, no one wants to do, and which is where you will be in a minority.
Yeah.
So I think just have the plain vanilla basic way of investing, minimize your mistakes, focus on creating long-term wealth. And I think if you just keep on compounding, even at mid-teens, I think good wealth can be created over a period of time.
Sure. Well, thanks for that. In fact, one of the questions which has also come, and I'll just connect with what you said till now, that you have been in part of the industry for very long, and you have seen many cycles. I mean, in last 20 years, you would have seen so many Black Mondays, Black Tuesdays. That is one, of course, that your experience will come handy, and the fund management team's experience will come handy. But from an investor or distributor point of view, when he has to look at, say, Abakkus Mutual Fund and then many other mutual funds, where do you think the differentiation will come? And do you really think that there needs to be so many things which one needs to do differently in this industry, which is, like you said, is more basics driven, more fundamentals driven?
So I think to the credit of the industry, I think we are blessed that we have great fund houses.
Yes.
And we have superlative fund management team.
Absolutely.
Very professional, very capable, and almost all are very, very great friends, and I've seen them, very dedicated. So I would say that irrespective of the fund house you are in good hands in most of the fund houses.
Absolutely.
Coming to Abakkus, I think everyone will say we are different. People think we are different. But I think, frankly, when we start, I would say that one, we are based in India. We are born and brought up in India. We are focused on India, and we do only India. A lot of fund houses have presence all over the world in terms of their partners and all. Second is we start small. So obviously that passion, drive is on performance rather than asset gathering. Third, obviously, I would say that we have a track record, and I'm not saying others don't have it, but I would say I don't know whether we are better or not, but I would say we deserve a chance. कि भाई 2% 5% जो भी है आप डाल के देखिए. We deserve a chance. Fourth, I would say because of the framework, the philosophy, the discipline, track record, not only my earlier avatar at Reliance Mutual Fund, which is now Nippon Life Mutual Fund, as well as 7 years at Abakkus. I think we have shown gradual, consistent performance. And as I said, we would believe in the basics and we'll try to do that. Other than that, I don't know. I would say that other mutual funds are also very capable. So, we are not saying that we will, be significant better. But I think focused, we'll have 1 or 2 funds, 3 funds, maybe smaller fund sizes. I would, to some extent, say that owner-driven in some way. This is the only business we have. Other mutual funds will have banks and wealth and insurance and broking and so on and so forth. We do only fund management.
Sure. So just to add to what Sunil sir said, see, I've been always telling the team at Abakkus Mutual Fund also that our business is of doing basics right. Our business is of investment management. Our business is of relationship management. Our business is of trust and risk management. Our business is of superlative service, and our business is of good communication. On these aspects, we have built a very, very good team. And what you can expect from Abakkus Mutual Fund is that we won't do or say anything just to sound intelligent. We know that we have to get all the basics right, and we have to do that continuously. If it is about investment management, we have to ensure that in good times we do well. In bad times, we safeguard the downside. We have to take care of all the risk management which has been regulated by SEBI or through our internal mechanism. The service quality has to be superb, and of course we have to communicate at every phase of market. So that is what we want to do. We don't want to do anything good or complicated just to sound intelligent, because it doesn't work. Our business is of trust and we will do that. And just to add to this, because there are a lot of our partners who have also joined us. So we are going to create a very retail distribution product-led AMC. We are opening branches in about 24 locations as we speak. We have plans to expand maybe 2 years from now. We have already filed for liquid fund. We have filed for flexi cap fund. So we'll complete our investment bouquet as we evolve from here. But you will see Abakkus as one of the AMC which will work with all our partners at ground level in all the locations which I said. So that's on the business side. In our subsequent webinars, we will also get Sanjay to speak to all of you, who is going to be the head of investments for Abakkus Mutual Fund, and he will then dwell more upon how he does all this risk management, stock picking, how does the MEET framework comes into his style of investing. Coming back to you,
just one
please.
Thing to add. See, I can say that we have a new team and very energetic team. So I would say in terms of energy, at least we believe that we will be miles ahead of others.
Absolutely.
And as Vaiibhavv mentioned, obviously we'll have the regular funds which we need to complete our bouquet. But I would say that as India evolves, as the investment ecosystem evolves, we are very sure that there will be a lot of scope for innovation. And that is where, not only my personal experience of looking at global markets, I was on the board of CFA Institute for 6 years. I was on the Capital Market Advisory Committee of IFRS, which is based in UK, for 3 years. The extensive travel, connect with the global ecosystem. I would say with the mutual fund, and hopefully in the future with this SIF, which is the special investment fund which SEBI has allowed, over a period of time, the intention would be from Abakkus to try and bring a little bit of differentiation also.
Sure. There are a lot of people who have joined today. They've been following your firm for many, many years, and give me an opportunity to ask some quick questions, maybe one-liner answers. One investing lesson you want to share with everyone?
I would say be positive. Because if you don't remain positive at the wrong time, you will redeem. I'll give a very funny incident. During COVID, we came out with a note, and everyone was scared that whether they will be alive or not. And that note was very simple: जिंदा रहे तो बहुत पैसा बनेगा, नहीं रहे तो it doesn't matter. So sometimes this very basic things, so I would say be positive.
Sure. Sunil, if not investing, what would be your career like? I mean, what would you have chosen?
I don't know, frankly. I am a numbers person.
Achha.
I started as a practicing chartered accountant, reading balance sheet, and that has got shifted to investing.
So where do you spend your Saturdays, Sundays, weekends, holidays?
So normally Saturdays I work half day, maybe from home, but that half day is what 2 days of office work because there's no disturbance.
Okay.
But I am that way pretty social. I have a lot of friends. We travel a lot. घर पे भी रहते हैं, movies भी जाते हैं, holidays भी जाते हैं. So it's okay. But I love work, and work is the best pastime for me.
Which is your favorite book?
So a couple of books I would say, a lot of books. I like autobiographies.
Okay.
And my whole perspective is autobiography कौन लिखता है? People who are famous and successful, they write autobiographies. And after being successful, they want the pranam chahiye, so they write books. So for 500 rupees, if you are able to get 25 years of experience of the most successful people, I think even if you take out 3 or 4 things out of that book, it is worth it. So autobiographies I like. But market-related one is Reminiscence of a Stock Operator, phenomenal book. And the other is Zebra in a Lion's Country, which is what mid-cap investing is all about. So these 2 books are all-time favorites.
Thank you.
Baki regularly, I keep on reading. So,
And like we were saying that economy is growing, a lot of new investors are coming. In fact, a lot of youngsters are getting into the markets. What is one advice you want to give to the young Indians who are exploring capital markets now?
So young Indians are of different kinds. One is young Indians are in a hurry. And in a hurry, typically you end up making mistakes. So my advice to young investors would be that treat your investments as investments, not as a lottery ticket.
Sure.
So focus on creating wealth, not on creating quick income. And there's a big difference in that.
Yeah, absolutely.
If you buy and sell, you're creating quick income. But the way to create wealth is to just let it grow.
Yeah.
And I think when I see the data points with the exchanges release of 96% people losing money in options, I think it pains, because you work for the whole month, save a little bit, and then blow it up in trading. So I would say that invest. And if you invest, India has huge opportunity. The other thing I would say to young Indians is that entrepreneurship is picking up big way in India. So explore entrepreneurship also.
Oh, nice. Nice. One mantra according to you, you want to give for someone to grow in life or business or whatever they do.
So I would say, first of all, be passionate. Half-hearted kuch nahi hota hai.
Correct.
Second, have confidence in yourself, because if you don't have confidence, ab beech mein dagmaga jaoge, you'll always keep on moving up and down. Third is be honest. And we discussed about compounding of wealth.
Yes.
I have great friends and I always discuss them. I think the biggest compounding is compounding of relations.
Wow.
If you have your relations which keep on becoming stronger by the day, I think the biggest wealth is created out of compounding of relations. And, I'm a live example. When I started Abakkus, the kind of love, support I got was all because of compounding of relations.
Compounding of relationships. So let me take a couple of questions which the audience have asked. So with government changing growth approach from Capex-led growth to a consumption-led growth, how will earnings of infra and capital goods sector grow?
No, so I don't think that the approach has changed from Capex to consumption. I think government wants to encourage both. Obviously, when GST is cut, the first immediate impact is on consumption. But, if consumption grows, automatically Capex will grow. If cars are being sold more than the production capacity, then the car manufacturers, the two-wheeler manufacturers will have to put in Capex. So I think it is a combination of both of them. And our view is that, if you see Mumbai, for example, or when I travel, the kind of infrastructure work which is being done across the country is mind-boggling. So I would say in India, both consumption and Capex infra will move hand in hand.
Sure. There's a connecting question that there's a lot of euphoria stroke FOMO around primary markets. I mean, a lot of IPOs. Every day you open newspaper, there are like pages and pages. So what is your perspective on this? Is it accretive for our capital markets or?
So, obviously when you are evolving as an economy, so I mentioned to you that we are a $4 trillion economy. So from 0 to 1 trillion, when the economy moved, there were some sectors, some companies which contributed to it. 1 trillion to 4 trillion was different sectors and different economy. We had no pharma, no IT. They were all born in the last 20, 30 years. From 4 trillion to 8 trillion will be again very different. So if you see our own spending habits, what we were spending on 10 years back and what we are spending on today is completely changed.
Different, yeah.
And what we'll spend 10 years after will also be very, very different. The only way to invest in some of these, I would say, forward-looking businesses is only if they come for IPO. At the same time, a lot of these businesses have been nurtured by PE guys and they are exiting. And obviously the secondary market is good, understanding is slightly low, and therefore valuations, there's always a question mark. So our view would be that yes, we need new listings, but as an investor, one has to be very conscious of what they're getting into. Whether it is a trading, whether you're just looking at the gray market premium and investing, and I think that is where the major mistakes are made. We are very careful as far as IPOs are concerned.
Okay.
At the same time, there are great IPOs which will give you an opportunity to participate in the future, I would say, great companies of India.
So all that is what new age companies are all about. So how do you see the new age companies coming? I mean, there were a lot of these questions being arise on PEs of some of the companies. How do
yeah, we are very conscious investors and I would say value conscious investors. But at the same time, as I said, this 4 trillion to 8 trillion is going to be contributed by a very different set of companies. And I think to that extent, we will have to now have a small portion of our portfolio in some of these new age companies. Having said that, we will still look at companies which are already profitable. So we are willing to give capital to grow, not to burn.
Okay.
And in select IPOs, Abakkus has started investing, but we are very conscious that one, they have to be profitable. And second is within our portfolio, we have carved out a small allocation because we do realize that this $4 trillion to $8 trillion of the economy will be contributed by very different kind of companies. And we can't not be forward looking. Otherwise, we will be irrelevant for ourselves as well as for our investors.
Sure.
So we have to keep a track of them. Some of them will become the blue chips. You look at the global market, Meta, Nvidia, Google, Palantir, they were non-existent. 10, 15 years back. If you would have taken that call, कि हमको देखना ही नहीं है, तो you would have been the worst performing fund. So we have to be careful, and at the same time, we have to be open-minded.
Sure. Another thing which also someone has asked, see, I personally also observed you for many, many years. You are also one of the fund managers who is very visible amongst all the partners, MFDs. You have worked with them. You have done a lot of meetings with them. You have, given them guidance on how to grow. And like in the start, we said that we have already 80 lakh crore industry. From now to future, how do you see the MFD business? Because that's also someone has asked that as an investor, how do you see the MFD business growing, or as an entrepreneur, or as a backup group?
I can say with a lot of confidence. See, normally Indians ना अच्छे टाइम में भी पूछोगे ना कैसा चल रहा है तो बोलेंगे मरे हुए हैं, मजा नहीं आ रहा है. But I would say that we are lucky, both of us, in terms of MFDs, distributors, as well as manufacturers and asset management companies to be in this business. The roadmap is huge. I think this business would be 5-10x in the next 10 years.
Okay.
And the good thing, the beautiful thing about this business is that we are contributing to the well-being of our clients, by encouraging them to be investors. बहुत कम बिजनेसेस में ऐसा होता है कि इन्वेस्ट करने के बाद में या पैसा देने के बाद में इन्वेस्टर को अच्छा लगता है. I think this is one business where you're creating wealth for them. The other thing is it's a business where you are going to be accumulating your business. So I always say this, if Apple has to grow 20%, agar last year they sold 100 phones, this year they will have to sell 120. In our business, if you are at 100 crores AUM, even if you go to Spain for a holiday for 1 year, you will have 115 or 120 crores of AUM. So I think the size of opportunity is huge. All we need to do as AMC as well as MFDs that we have to work in the interest of the investor. Investors should be first. Everything else should come later. And what is good for the investor will ultimately be good for both of us.
Sure. So someone has written, sir, I am following you for last 5 years, a big fan. Why did you take so long to take this decision? Now, is it possible for us to go on a decade-long journey with you from now on? I would say decades. But what is your
I would say that you have to be an investor and you have to encourage your investors to be mutual fund investors, whether it is with Abakkus or any other AMC which you are confident and like.
Absolutely.
Obviously, Abakkus would be striving to be there for, as you said, not only decades but maybe centuries. Obviously, even after 50 years, if someone remembers Abakkus and someone remembers Sunil Singhania wherever I am in heaven or hell, it would be such a huge pleasure. Why did it take us so long? Obviously, it's not a very easy business for an individual. See, all the other AMCs are large. They are banks with lakhs and lakhs of crores. They have 1,000 branches, 500 branches. We started in 2018, so it took us a few years to build credibility. It took us a few years to have some money to invest in the mutual fund business. Also, SEBI requires us to apply only after we have completed 5 years in this business. So we completed 5 years in 2016, 2023, and then we applied in 24. But with your support, I think we will do in 5 years what others have taken 15 years. Yeah. So please bless us.
Yeah, and I think very few fund managers who have made an investment management firm and they have come a long way. So I think that's another thing to look at Abakkus, that our promoter has done only investments all through his life. So that pedigree, that lineage which comes, I think that also is going to be very, very helpful in the centuries to come. All right, so another question which has just come is that, Sunil sir, you just mentioned about entrepreneurship opportunities. Can you circle upon if in present times, having the experiences you have, if you are starting your career in the investment industry, how would you approach and discuss upon a blueprint that would use also, most importantly, what is something
you should not do?
Yeah.
So, I think it's a little bit of a complicated question, but, I will just say that whenever you undertake an entrepreneurship opportunity in any field, I mentioned you have to be passionate. You have to give it all your bit. You have to be positive and you have to be honest. I think in the investment industry also, many times, you feel, "Arey, abhi to bahut badh gaya, ab kaise hum aayenge?" All you need to do is consistently perform. It takes time for investors to build trust. But when investors build trust, they really, really support you. So I think irrespective of the business you are in, including on the investment side, then you have to start somewhere. But keep investors' interest at the paramount. Work hard, work passionately, don't try and use shortcuts. And over a period of time, you will grow.
That's very, very beautifully spoken. So yeah, I think no more questions. Maybe, there's one question on gold and silver, if you would like to take that.
So, I was lucky. I'm not a big believer of gold and silver, frankly, for a simple reason that, one, I don't understand it too much. And second is gold and silver are not growing assets. And I'll explain to you what I mean by that. So if you buy 100 grams of gold for 5 kilos of silver and you keep it, after 20 years, you'll have 100 grams of gold and 5 kilos of silver.
Yeah.
If you invest in equity, if you invest in a company which has 100 crores of revenue, Maybe in 10 years, that 100 crores of revenue will become 300-400 crores. Maybe in 20 years, it will be 1,000 crores. So they are growing assets. So obviously, equity as a growing asset always has the opportunity to give you higher returns. Gold and silver, you make returns only when the price moves up. And price moving up is a function of a lot of factors which are not fundamental in nature. I have not come across a single report which fundamentally tells me that why gold or silver should be up. Silver, people argue that it's an industrial commodity and all, but gold is all a currency weak hai, isme aisa hai, central banks are buying this, that is the reason. Last Diwali, we were slightly positive. I think now I am a little wary. And I believe that from a 1 year perspective, both gold and silver should give you negative return. But I'll put a disclaimer. Most of the time I go wrong on gold and silver.
Sure. I think we are well on time, but any parting message, any guidance?
No, I can just say that thanks a lot for blessing me in particular for last 25, 30 years. And I'm very sure you will bless our entire team led by Vaiibhavv at Abakkus Mutual Fund as we move forward. We will try our best and we'll try to make a mark in this industry, which is very competitive, has very, very big and strong players. But with your support, we will try and do our best. As I said, interest of the investors will be first, and then all of us will come. So thanks a lot, and we intend to be engaged with you. Our first fund hopefully should be launched anytime soon. As Vaiibhavv mentioned, a couple of funds are already in the pipeline. We will keep you informed, but please do remember us when we launch the fund. Thank you.
Thank you so much, Sunil sir, and thank you everyone for joining. Just as a parting message from my side, we are a young AMC, but with decades of experience. All of us at Abakkus are quite excited with the opportunity. We understand that we have come a long way in terms of industry. As we speak, we are about 80 lakh crore, and last 5-10 years, we have grown at a CAGR of about 20%. But with financial literacy going up, partners doing a great job, regulators doing a great job, and the aspirations of Indian investors going up, I personally believe that this industry is still about to grow at about 20-25% for next many decades to come. And in that journey, someone like Abakkus, who had defined investment processes, should definitely be given a chance. And for that, me and my entire team will reach out to you, and we will seek your support. Keep us in your radar. Do allocate as and when we launch our products, and do track what we deliver in terms of investment experience. So with that, I would like to close the webinar. Thank you so much for joining on Saturday morning, and we look forward partnering with all of you. Thank you so much. Have a great day ahead.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.